Hey folks, welcome to CFO Chat. As always, any corporate action happens, you have all the detail here. Kenya Power released the full year numbers for the period ended June 2023. We are delighted to have the FD, Steve Vikiru. Karibu sana, sir.
Thank you, Julian.
Asante sana. Steve, this conversation has to start from the FX exposure side because the hit you have taken from a finance cost perspective is quite heavy. 24 billion shillings. And when you consider that Kenya Power is under a moratorium, that's quite heavy.
Yeah, it is. The Forex impact has been the most significant, had quite a significant impact on the financials. And the key thing here is that we are an organization that has 100%, I would say, revenue in Kenya shillings and obligations that are quite heavy in foreign currency. Our loan book is about above 90% in foreign currency, and that's because of the moratorium that you mentioned about. And this is because the loan book comprises of commercial debt and on-lend debt. On-lend debt is debt that is from bilateral institutions, DFIs, through government. So it's entirely in foreign currency. And then with commercial debt as well, we have a huge part of it in foreign currency. This is informed by the kind of projects and the time at which we took these loans. So that, together with the power purchase agreements that we have, which are all foreign direct investments, are in foreign currency. And that's why you see that kind of an impact. What I would say is there's a bit more that we can go deeper on the Forex matter. Largely because the unrealized Forex seems to actually sort of distort the performance from a fundamentals perspective.
Yeah.
Because if you look at those, the financials that we published, we released for publication today, you'll see that the top line, there's quite some good growth. Yes. You see from an operating expenses, we are fairly good. And so the finance cost is where the problem is. Operating profit, actually it's an increase. So we've performed much better from a business perspective and when you compare to last year when we registered a profit. But just because of the depreciation of the Kenya shillings, yes. And more interestingly is on the on-lend debt. We did not draw down any on-lend debt. But that loan book, the on-lend debt loan book increased by 10 billion because of our valuation. We valued at 118 to the dollar in June 22, and now we are valuing at 140 to the dollar in June 23.
It's quite a hit.
That impact is what is sitting in the finance cost.
So how do you address the issue of wrong way risk for yourselves? Because for the ordinary Kenyan, at least when you see our bills, we know there's a Forex adjustment provision for it. And here you are telling us that wrong way risk is now a big factor for you. But I thought the bill already takes care of this. So how do we look at this going forward?
The bill does not take care of the unrealized Forex. How it happens, the tariff mechanisms allow for pass-through of Forex, but only the realized. What that means is that when, for example, if the Forex is related to power purchase, when I pay that obligation, yeah, then at that particular point in time, the Forex impact can actually now be passed through in the tariff. But then when the obligation, I am sitting with the obligation still, then any variations as that, and that is in accordance with the International Financial Reporting Standards, I have to take that in the P&L. For example, there is a Forex impact in the power purchase cost that you see in our financials at about 5.2 billion shillings, and the 16 billion that you see on the loan side. What that means is that when these will be paid, then there would be some aspect of it that will pass through the tariff. So it's just a timing issue when it comes to the recoverability of that. One important thing to note as well is that there has been an availability of foreign currency in the market, and that really is the big thing around that figure. Because if we were able to pay our obligations when they were falling due, and actually we have the liquidity to be able to do that, the impact of the unrealized Forex on the balance on the P&L would not be as much because the outstanding amount would have gone down. So the amount that you translate as at the year end of the balance sheet debt would be much lower. So the impact would be lower. So in essence, what we are doing is that we are sitting on some FX that already would have been either through the tariff or already taken care of in our payment processes.
So Steve, now the question becomes, are you rejigging or are you seeking to rejig the moratorium that you currently have in any shape or form, given the sort of hit you've taken in the latest numbers?
This moratorium, it expires in June 24, and all intentions are not to extend it. Not just because of the forex exposure that we are having, but also the company has come a long way. And at the time we took the moratorium, our cash flow situation, our working capital, I think we had discussions around that time, was quite dire. Currently we have working capital that's still negative, but quite improved. So we are in a position to start repaying the loans on that. But then there's another perspective that touches on those loans, which is the balance sheet restructure. So there's a chunk of those loans that is intended to actually fund the transfer of some of the transmission assets to Ketraco. So we expect that after the valuation of the specific identified assets for transfer and the transfer is completed, whatever balance, if any, on the on-lent loans would actually start repaying that. So, but we'd have to have new repayment schedules and new agreements on that with the government to be able to repay that. But we don't look at extending the moratorium.
You've touched on the issue of the working capital, and actually that's one of the, for me, the bright spots in the latest numbers that you've put out. Because the last conversation we had, Steve, if you remember, the situation was dire. Still negative currently, but I would say considerably improved. How did you get to this point? And my bigger question there is, we had the tariff review coming in starting April this year. How is that playing in this larger scheme of numbers and the metrics like the working capital we're looking at?
The working capital, Julian, we've come a long way, as you say. In, I think, 2020, we were at a minus 74 billion. Yes. Yeah, we've had those improvements. I think now we're just about 50 billion negative.
51, actually.
Yeah, now the thing is that the improvement in the working capital has been gradual, and it can only be gradual. One thing is because of the structure of the business. This is a utility that's 100-year-old utility, but still quite expanding. So you actually tend to convert a lot of your current assets into fixed assets, but they generate current liabilities. So that structure is because you're using your cash, you're creating current liabilities in terms of the contractor payments and the payments for material suppliers, but to build assets, to construct the lines. So other than doing the trading business of purchasing electricity and retailing, distributing and retailing it, there's also this bit of expanding, and that's what informs the expansion that we had in the negative working capital. But to your point on the reduction, the reduction path was quite interfered as well with the 15% tariff reduction that we had previously. By now would be in the regions of 30-something or thereabout. But then that's now behind us. And as you asked about the tariff and how that is impacting, we expect the tariff to have, actually we've seen some positive impact towards that. In the financials that we've published, might not be quite because the tariff only came in Q4. Yeah, so we must also note that quite a bit of that tariff review was to factor in the increase in cost across the electricity supply chain, was also to factor in some reclassification of some costs that were not in the best tariff that needed to go into the best tariff as such. So it has a positive impact as such, but not really the main driver, because on the working capital side, we've been trying to do that over time. What we expect to also really help us on the improvement of the working capital is the balance sheet restructure, which we expect will help us, again, increase the traction in improving that towards.
Interesting point you raised there. And speaking about the balance sheet restructuring, and I think the cabinet did sanction this sometime in May, if I'm not wrong. The assets that are being hived off and going to Ketraco, someone looking at this might be wondering, so what does this mean for Kenya Power from a financial soundness standpoint? Maybe you can just give us some color on that.
From a financial standpoint, I would say there's quite some significant gains that would arise from that. And I think there are certain things that Kenya Power cannot do based on our mandate and the business that we do that maybe a different state agency would actually be able to do. If you look at what the cabinet approved, there was the first step, which was the transfer of assets, and then there was the monetization of the assets and all that. So I think Ketraco will be better placed in terms of taking on that. And as well, realigning the sector for efficiencies and all in terms of specializing in transmission. There are certain equipment, skills, and all that are purely for transmission. And I think once you do that, then you can have that in one place, and that way you make it more efficient, and KPLC concentrates on the distribution side of it. But then on our balance sheet, what that means is first is a stronger balance sheet in the sense that some of these assets currently are quite undervalued because we used a historical cost basis in terms of our carrying assets. We don't revalue assets not unless we would want to sell the assets as such. So to be able to do this, and as cited in the cabinet memo, the transfer will be on a commercial basis. So we'll do a valuation, and then after the valuation, whatever amount that is determined out of those specific identified assets would actually be now transferred to KETRACO. Two things. One is that there will be a maintenance arrangement between KPLC and KETRACO. And secondly is that when the transfer now is done, then there would be the issue of the loans, the part of the on-lend loans that will actually would be taken out of KPLC books to fund that. What that does is that it reduces KPLC's gearing, but also significantly, especially under the current environment, our forex exposure. I told you about the loans, so quite a huge chunk of the on-lend loans, which very concessional, very long tenors, but quite heavy in terms of the
I can imagine. Now that you've mentioned that point, and I'm just curious, and I know you've mentioned that a revaluation needs to be done, but I'd be curious, in your own market sensing, and I'm sure you've done this, Steve, what sort of value uplift do you think this restructuring would unlock for Kenya Power?
In terms of the valuation of the assets, as I told you, these assets, there are various considerations that go into valuing an asset. Not just the cost of putting up the asset, but also the kind of income it generates or it helps generate in the process. And these are key assets in terms of generating the revenues that you see as reporting. So what we'll do is we expect the valuation to actually take all that into consideration. Some of the assets are fairly new. We have like the gas insulated substations, the GIS substations. That is quite an advanced technology in substations, and one of those is close to 10 billion shillings, you'd say. So as you see the value in our books as reported, the written down value, as we call it in financial terms, then that is way below the market value of those particular assets. So once we have identified those, then we are able to know what part of our on-lend loan is actually going to be offset.
Still on the FX question, so we've discussed significantly about the impact you are taking from the loan book side. But when it comes to your deals with the IPPs, are there any conversations which are ongoing around how you can deal with this question of the FX exposure?
Oh, yes, Julian. On the IPPs, the exposure on Forex on IPPs is also quite huge because about 60 to 65% on a monthly basis of the power purchase is invoiced in foreign currency, euro and dollar. Now, the discussions with the producers has been on two fronts. One is the current operating environment where we are unable to get sufficient liquidity in Forex terms to be able to pay the obligations. We have engaged them quite a bit, and a few of them have been able to pick some Kenya shillings equivalent for their obligations so that they are able to continue operating. But then some, based on the structure and at the time at which they are and their financing arrangement with their financiers, have not been able to pick that. So we continue trying to pay them as much as possible with the liquidity that we get in the market. But then the other side of it is the discussions, negotiations with them. There's a negotiation forum that was kicked off by the Ministry of Energy, by the CS Energy. And this was based on a mutual kind of discussion towards seeing how we can optimize the price of energy with a view to reducing the end user cost of electricity. Now, within that framework of discussions, and previously, there was quite some issues around negotiation through a task force that appeared to not to be very well taken by these parties because they are contracted. But now, on that mutual basis of discussion, we have engaged quite a bit, and the negotiations are at different stages with different generators. And what I can say is that a number of generators have indicated willingness to actually convert part of their invoicing into Kenya shillings, specifically the quantum that represents their local costs in terms of salaries, taxes, and all that. So we are looking at, not for all of them, but for quite a number of them, maybe between 10 to 25% of that going to be in Kenya shillings. But then for future purposes, I think the government has been very active in mobilizing savings, building local capacity to be able to fund projects of this nature in Kenya shillings, and that way we would have a Kenya shilling PPA without necessarily having to get a foreign lender or guarantor to actually backstop them.
So the question that follows from that then is, of the IPPs Kenya Power is engaged with, what proportion of them are on the table with these discussions?
The intention was to have everyone on the table in terms of these discussions, because there are a number of things that are actually to be discussed. Just if I could name a few, there is the issue of the least cost power development plan, trying to see how we can plan power into the future, even as demand grows. There are issues around e-mobility and all that that would take up quite a bit of demand. So when we look at that, we know the PPAs have a lifespan, but if it is renewable sources, then you'd want to extend that, you'd want to have it serve for longer. There are discussions around optimizing the way fuel is procured for the generation fuel to be able to get the least cost but effective in terms of the generation. So there are quite a number of things that are packaged in that renegotiation. So to your question around the number of those that are involved in that, it's the whole set of them, especially the operational ones that are already running, including KenGen, the main generator. And we've had a number of discussions to be able to see how we can optimize the whole chain of generation, so that in the end we have affordable but reliable electricity. So we are at different stages with
interesting there. So we've had indication from Kenya Power that there is board restructuring underway in terms of the representation of independent directors. Maybe just speak to us in terms of what's the end game with this. I have had it hypothesized somewhere that potentially this is a signal to a view that this could be one of the entities which GOK could divest further its stake.
On the board restructure, I think the board restructure is part of the bigger restructure that the government envisioned. If you look at the Kenya Kwanza manifesto, there was an indication of really ensuring that Kenya Power operates on a commercially viable basis. And we've seen that steps in that direction, quite intentionally, quite well-intended steps in that direction. The first was the issue around the tariff. And second, there was now that cabinet memo in May that was approved around the balance sheet restructure and transfer of some assets to KETRACO and reduction in the loans. The other one was the issue of the amounts that government owes KPLC. That was provisioned for in the budget, and we are engaging with government in terms of the payment on that. Now, the board restructure was the other one, and the key thing here is that government has a majority shareholding in KPLC. Quite thin, but still a majority. So the thing here is to drive independence in the board, so that when you have independent board members, it's not like the majority shareholder has actually voted. When the government votes as is now, yes, then it's a win. So really it's just to very deliberately bring in some independence where the minority shareholders also have a say. And I think we've seen quite a bit of that. Like at the time when we had a tariff reduction and we held an investor briefing for releasing the financials at the time, there were some shareholders who actually came in and they wanted to have a say in terms of what was happening. They were against the tariff reduction and all that, but they just didn't have an avenue or a representation in such a way that they could be able to bring these up to board level and all that. So I think noting that and other key stakeholders like the financiers and all that, I think that point is really aimed at now driving that independence so that the shareholders, minority shareholders are well represented. Their interests are also taken care of. Yeah. But then there's a second part of your question around if this is part of the view around
GOK divesting its stake. And also when you couple it with the fact that we're having a balance sheet restructuring at Kenya Power.
Yeah, okay, I wouldn't want to read too much into it, but really GOK, I think there have been some information around the specific entities that GOK is targeting to divest from at this particular point in time. KPLC is not one of them as it is now. But then given as well the strategic positioning of KPLC, not just in the sector, but in the economy and the way it powers the economy, I think there would be quite a bit of things that GOK can actually do before the thought around divesting. But to relate it to the balance sheet restructure, I think then that way one might say maybe the transfer of the assets, other than driving the efficiencies within the electricity supply chain, there would be some sort of trying to really position KETRACO as well in a manner that KETRACO becomes more viable, more robust in terms of the kind of business they do in fiber, the monetization of assets, and any other opportunities, because it's still 100% owned by government, so it can be built into a much more vibrant business beyond just the transmission of electricity. So that maybe you could think of it in that direction. Then maybe at a future date or something like that, a part of it is.
Steve, I noticed in the numbers for F23 released just yesterday, there was a restatement of numbers for F22 and F21, and I really want to understand why that was done.
Julian's restatement of numbers is not the best thing actually from a financial perspective as such. It usually sends sometimes the wrong message, like there have been some numbers that were not correct and all that. But I think in this case there are events that happen that actually now relate to other years, and you have to unwind that and place it where it's supposed to be. To this, I'll give one example, is like the tariff reduction. When we had the tariff reduction in 2022, January 2022, there were certain interventions that were put across, and some of those were sector entities were to contribute and all that. And the year ended before some of these sector entities actually did their contributions the way they were supposed to do them. And I think based on some other interventions across, they now brought in those interventions much later in the day. So while part of that related to previous year, it had actually to be restated into that previous. So it's sort of a clean way of actually doing things, the matching principle in accounting, so that costs or revenues stay exactly.
You've mentioned the tariff, and I've just remembered that ever since we got the new tariff starting April, I'm really curious, because what the new tariff did was to scale back significantly on the eligibility for the lifeline tariff. How has that impacted your monthly collections? Because one of the things which stands out, of course, in the latest numbers is that your top line has grown in a relatively commendable way, looking at it historically, of course.
The growth in top line, one is because of the about 5.9% or thereabouts increase in the units that we sold. So that means that the business is growing, and towards demand, I think we've continued to hit new peak demands as it goes. That tells you there's quite a bit of growth in that. As well, going a bit into the numbers, the kind of growth that we've seen in under the various customer categories. As you say, we've seen a thinning on the domestic customer category, where we had a decline, about 100 megawatts. But then on the commercial, industrial, and small commercial, we've seen growth in terms of the uptake as such. And that could relate to the fact that the lifeline tariff was narrowed down quite a bit. But then the narrowing down of that lifeline tariff was really to align it to the kind of threshold that we have for lifeline in other regions, and as well within our region here in East Africa. Because a household that consumes more than 30 units then is not necessarily lifeline kind of customer as such. So the key thing with that is that while the cost of electricity has gone up, what is important for the customers and the viewers to note is that for a generation plant that was charging, say, 7 US cents per kilowatt hour 18 months ago, and still charging the same price, they haven't increased their price. But 18 months ago, 7 US cents was just about 8 shillings. Yeah. Right now, 7 US cents is about 11 shillings. Yeah. So really, the issue of Forex, the issue of fuel prices, the macroeconomic dynamics and all that, and it's not just in Kenya, have gone a long way in the whole pricing dynamics as such. If you were to remove that from the price, you'd realize that the cost of electricity is one of the things that has not moved in a long time. Yeah, so those quite speak to that. It's almost the same thing that you see if you look at the price you purchased fuel at the pump exactly the same time last year and what you're purchasing at now. Those are the kind of things that
Steve, let's wrap up this conversation. How are you going on with the recovery of bad debt? And I know that's a big headache for Kenya Power.
The debt has actually increased. If you look at our numbers, and we took quite some significant provisions in the year. Yes. And the reason for the increase in debt, one is what you say around the recovery of debts. That is what speaks to collection of our revenue. And number two is that besides that, there is the monthly billing has increased. So this creates a bit of difficulty for certain customer categories to pay their bill because the bill is much higher than it was previously. And the spending power has also, it's quite a bit of a challenge. There's a bit of new taxes here and there, prices of commodities and all that. So electricity becomes a little lower in terms of the priority payments that one would pay for. But as a company, what we are doing with that is, one, there is the issue of the prepaid metering that has quite helped a bit in terms of people managing their consumption, and also for us collecting a bit in advance. But then also putting in place measures to engage, especially the corporate clients and even government as such, engaging in a manner that we are able to, one, through smart metering, you're able to get the very correct readings, you're able to even give customer a bit more information than just the bill as such, which actually creates a bit more transparency in the way we do, and the customer pays knowing that they're actually paying for their consumption. But then again, to be able to really deal with the debt provisioning and customers being unable to pay their debt going into the future, we're also looking at leveraging on the bulk metering arrangement, where, and this we are starting with the people settlements, the informal settlements, where we would get one metering point, and then another licensee, as EPRA would call an entity that is licensed by the regulator, would actually take up from there and do the reticulation within that particular area, so that our billing point is just one. That way we are able to reduce a bit on the administrative issues and the losses, commercial losses and things like that. But then also the bulk tariff is a bit lower than the retail tariff. So the investor that would actually do that would actually benefit on that kind of a margin. So when we do that, then we reduce the various billing points that would actually have some revenue leak.
Steve, around the bulk metering, one of the things which I struggle with, and I'd really like to get your thoughts on this, is which investor will take on this risk? I can imagine if Kenya Power, with a government stake, has struggled with, let's take for instance, the informal settlements. Who will take on that risk? Never mind the margin that you've mentioned.
Initially, we had thought of community-based organizations because they do other social services within that and all that. But I think we went out with an EOI, and I can tell you most definitely there is interest. So there are people who would actually, and you know, with this age where you can actually use technology, I think we will get a solution to that. One thing to mention is that although not in the informal settlements setup, there are already customers who are on bulk metering. We have customers who they build an estate. I would say, for example, Two Rivers or Tatu City, or yeah, those are customers who are metered at high voltage, a bulk meter. They do the reticulation within their establishment, and they are able to meter as such. And as well, the Energy Act 2019 and the regulations that have come thereafter, there are many licensees in this whole scheme of things. So you find a licensee who now, you become a licensee because also the regulator needs to be aware of what you're doing, the prices you're charging your customers and things like that. So the framework is quite there. Technology is quite there. So I think it's something quite that KPLC actually might be a bit challenged in terms of doing it more effectively than.
How many submissions came in? I don't want the names, just how many came in.
Okay, I wouldn't go into that as such. I don't have the numbers as such, but what I can tell you is there's quite a bit of
appetite.
interest. Yeah.
Finally, Steve, arrears to Kengen, how are they looking like?
We've made quite significant progress in arrears to Kengen, and if Kengen was seated where I'm seated, they would actually tell you the same thing. But then the key thing here is that there is the bit of forex unavailability that has actually dragged us quite a bit. Kengen is largely in Kenya shillings, but also they have some plans that are in foreign investments by foreign investors or really financed by foreign lenders, which they bill in foreign currencies. So for those, I think that's what has lagged a bit behind. But we've made quite some significant progress. On a continuous monthly basis, I've paid Kengen much more than they have invoiced me for that month. So we are reducing the overdue that accumulated a few years back.
When do you see yourself extinguishing that?
We have programs, like I mentioned to you, I think some new funding arrangements that we are looking at. There is like now the World Bank Green Financing Project, which has some targets, some metrics, what they call them DLIs, disbursement linked indicators. And one of those is the annual reduction of payables to sector entities, not just Kengen. So that looks at reaching the contracted, that is the 40-day repayment period within a period of 5 years. So we are coming from a long way where we had 180 days payable, looking at getting to 40 days in 5 years. So I think it's something that is achievable even based on the traction that we've gained in the last financial year.
Steve Vikiru, thank you so much for your time.
Always a pleasure.
Appreciate it, man.
Thank you very much.